If you haven't got started investing, I'm gonna give you a reason why you should get started investing. Why? Because I'm investing now, and I've been investing for quite some time. Literally for quite some time. I want to say forever, but literally for some time. And I like what I'm showing to you guys on YouTube. Don't take that as like my life. Like I'm showing you guys beginner stuff. Like right now, if I flip this camera and I show you, like you guys don't even know where I'm at right now. I'm in a different country. I've been in a different country. I've been living in a different country. And I say that because investing has bought me my time back. And me showing you guys accounts for $40 when I first started out, because I get a lot of comments. I'm seeing a lot of comments that are like, "Oh my god, bro, you only have a couple dollars. How could you give information as far as like investing?" I was like, "All right, whatever. You don't know me. I'm not here to argue with you. You're right." So I figured for me, in order for me to like get to the people and so you guys can hear me. I mean, not you guys. I know there's out of 100 people, there's gonna be that one person that actually it sticks, right? For that one person that's gonna stick with, I want to be able to relate to that person in every sense that I can, like every way that I can, right? So if I start the YouTube channel with a little bit of money, and there are people literally out there that wants to get started, but they have a little bit of money, but they think it's hard, they think it's impossible, they don't know what they do, they don't have motivation. There's maybe not a lot of YouTube videos consistently out there to show what does it look like, whatever the case is. And I just want to be able to document that journey and show it to you guys, and you guys take what it take from it. Like take whatever you want from it. If it's a bad run, cool. You guys learn. If it's a good run, you guys cherry pick and take what you want from it. So that's that. Ladies and gentlemen, if you haven't watched me by now, definitely pause this video. 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 Pause this video and go ahead and watch my other videos. You have to. I'm telling you. As a matter of fact, do me the favor. Like the video. Drop a thumbs up on the video. Drop a comment. Please and thank you. Please and thank you. Because I'm looking at the stats right now on YouTube right now. You guys are watching my videos. Leave a comment. Let me see what you guys are talking about, what you guys are investing in, and all that. And let's get the motion rolling. Let's get the motion rolling, baby. Um, I might get margin called today. I know we're gonna get margin called because this little spy play that I have here, we have a credit spread. A credit spread is a stock option play that you can utilize to play the market without having a lot of money. So right here, I have 10 contracts of SPY, um, vertical spread. So put vertical spread. So what I need on April 30th is SPY to be above 719 at the end of expiration. If that is the case, I will collect. I will collect like $96, $960, something like that. Collect $960. But if SPY makes a big jump, big rip, I could get out the contracts a little bit earlier and make a little bit of profit. So if you don't know what a vertical spread is, go ahead and watch my other videos. I will explain what is a vertical spread. Now, ladies and gentlemen, as far as getting invested into the options, or as far as getting invested in the stock markets, look, even though I have a little bit, or I have like what 6K in the account, I have stocks that only have a little bit of money in, right? So for example, your equity, the stocks that I'm investing in long term, not trading, none of that. It's right here. Is these now? SoFi, Hims and Hers, Intels. Those are plays I'm doing on the just for here and there. But as you guys can see, these stocks that are like 40, 100, 30, whatever. Oh yes, margin call. They're gonna try to hit me with margin call. Um, you see this right here? These are stocks that I am invested in into the long term. These stocks that I've been buying weekly, monthly, whatever the opportunity presents itself. And then I want to even show you guys here. If you guys been watching me, the proof is in the pudding The proof, this is video right here. If this is your first time watching my video, the proof is in the pudding in this exact video. But you gotta watch the other videos for it to make sense. For example, Nvidia. If you've been following me, guys, if you've been following me, I've been down on Nvidia. I've been down on Nvidia. And look, I'm up. I'm not up a lot. Yeah, I'm only up $2. Someone's gonna be in a comment, but you're only up $2. But that's not the point. My point is, if you watch the videos prior and if you keep buying fractional shares every single day in the stock market and you keep buying dips every single day in the stock market, you will have a better result than the person who just buys one time or who doesn't buy often enough or who just puts a one-time deposit and thinks they're just going to beat the market. That's my point to show you guys. And my point to show as well is you don't need a lot of money to do so. And if you don't have a lot of money and you're doing this, right? Think about this. Think about this. I started this journey back in November 13th. I have $23. I have $21 technically because $2.85 is not mine. It's profit. Well, it's not profit. It's gains, right? So I have $21 in this. That's my money. If I sell out of this right now to collect my $2.88, yes, what we're in April. I started in November. That's 6 months. Yes, 6 months to make me 13%. That's what you gotta look at it. Don't look at it as this. Yes, $2, but I only put in $21. I was like, how much? Like, what? Like what? $20 investment can you make that's gonna get you a disgusting return? There's not a lot out there. So the fact that I made 13%, $21 on a 6 month investment, and it wasn't even like a 6 month investment. Like, oh, I put it all at one time. No, it was like consistent, and eventually, look, I'm up. I was down on this. You guys gotta watch the other videos to understand. Like, I was down on this stock, but guess what? I kept buying, and look where we're at now. We're up right now, baby. We're up right now, baby. Listen, I need you guys pause this video. Go ahead and watch the other videos. Drop a comment down below. If you guys aren't already following me on my social media in TikTok and Instagram, it is strictly financial. Go ahead and follow me. Back to the video, ladies and gentlemen. We are going to talk about our positions that we have here. I have Bank of America. I'm getting crushed, right? I'm getting crushed in the sense of, look, I did a covered call on Bank of America. So this is the what the world would say it's a bad play, but for me, I'm like, there's no bad play because I still made profit. So follow me here, guys. I have 100 shares of Bank of America at $52.15. I got a covered call at the $50. They gave me a $2.49 credit. So realistically, if I'm selling these 100 shares, I'm selling it at 52.49. My average cost is 52.15. So I would make about what, like $34. I'm making $34 as long as Bank of America stays above $50. So $34, and right now, if I didn't have this contract, I would be up $215. So yes, I capped my gain, but at the same time, I protect my position. So I rather protect my position. I rather protect my income because I'm in a sense on YouTube. In a sense, I'm starting out. My journey is still fresh. So I rather build. And when I get to certain positions, I get to certain time of my journey, I don't need to really hedge into the market because, like, for example, right now, let's say these prices are a year from now, they no longer are the same. They're just like 50% up, hypothetically. Okay, I can sell out of the money contracts because I don't want to sell my shares. But here, I want to kind of like sell against my shares and to make profit. That way, if the stock goes down, hey, I'm not losing a lot of money. If the stock goes up, okay, cool. I didn't make a lot of money. I didn't make the money I was supposed to make, but I made money. And I think that once you can come to that acceptance of this strategy, you can maintain the control of your portfolio. because I'm not trying to chase these big gain and chase these big numbers and stuff like that. So Bank of America, yeah, thank you for the $35, $34. As long as we stay levitated above $50. Today's Wednesday, so we have 2 more days. So I'm getting crushed on that. Another one I am getting crushed on, but I'm okay with it, is Coca Cola. I'm down $193. I did a covered call, which I bought out of. Oh, and I sold my call. I did a cover call right here, contract. I bought out of it the first, so I made $7. I made $7 on it. I should have probably never sold it. Sold for 28 yesterday. Let's see what's worth today. 77.50. Oh my god, I would have cashed out. I would have so cashed out. So whatever we got bummed down that one. That's fine. But we are in another one today. We got the 79. We may try to roll it over and just keep collecting premiums that way and use the premium dollars to buy into the stock. That's the goal. So the premiums that we get from it, we're gonna use those premiums to buy into the stock. So what I'm gonna do right now is actually roll this stock over or roll this contract over, and we're at 77.20. I didn't really do a dent, so I'm still gonna stay in the 77s. 77.20. Yeah, we're gonna eat the 16. Let's see if I can get one of my contracts filled. Oh, they're not gonna let me. All right, whatever. So we're gonna have to eat that, I guess, contract because my margin buddy. So margin, if you guys don't know, is basically like I have 6K in the account, but like they let me borrow funds. So as you guys can see, like I have 100 shares of Bank of America, which Bank of America alone is $54. 50 right here when I got it, it's $52. So for 100 shares, it's basically $5,200. Now, um, for Coca Cola, same thing. I have 100 shares of Coca Cola, 100 shares of Bank of America, 100 shares of Intel, 100 shares of SoFi, 100 shares of Hims Hers. How in the earth would I have all of these shares? It's because I'm on margin. So because I'm on margin, I'm on borrowed money. They're not allowing me to get these contracts. So hey, whatever, cool. We just let the time expire. We let these things do their thing, and we rinse and repeat. So we can't get into Coca Cola. We already have the contract, but it's only $2 left on the premium. Hey, what can we do? Chill out. Cool. So now we're gonna buy some stocks, ladies and gentlemen. We're gonna buy Coca Cola. We're gonna get it in for $1. Dollar make it holla. I don't want to get in too much now because I still have the 100 shares, so I want to be careful with the 100 share play that I have. Um, Bank of America is up. I know that for sure. SPY is up. We can get some lows. Lows is down today, so this is something I like to do when I'm buying. And there's a buy side strategy, or there's a when the market is an upside strategy and when the market is a downside strategy. So the market is down today, or yeah, the market is down today, or this stock is down today, but the price is higher than my average cost, and my market value is $34. When the market is lower than my average cost, I like to buy 10% of my market value. But if the market is higher, but we're red today, I would like to buy just for $1. I like to buy really, you know, calmly because this is going to raise my average cost, but I don't want it to raise it too much. So that's the buy side of things, right? Like the strategy. This the when the stock market is down, but it's higher than your average cost. We have another one here, which I'm going to get into, which I haven't gotten to in a while. We're going to get into. Look at that. Okay, like this margin thing is freaking killing me. I know it's doing it. It's the spy contracts I have, but whatever would be good. Next one, ladies and gentlemen, we're going to buy. Netflix gotta chill out. Look at that. We're just green on everything now. We're green on everything. Intel's up. Um, I sold out of the mining place. So right now we are going to figure out what stock we're gonna get into next. But everything is green today, so it's like today's kind of a bad day to kind of put your foot in the water of any of these things. Let's see. Let's see what is. I don't want to look at these things because I don't even know what's gonna show me. Ladies and gentlemen, that's pretty much that caps the day. I can go over these plays. I got Intel for I got a 71 covered call. I got it for $20. Today's Wednesday, and I'm negative on the contract. So this is a 6 point move, and the market really believes that this could probably happen. So we're gonna duke it out, see what happens. If not, we're up on we're up $128, and then we have SoFi, which another one I'm kind of getting crushed on, but that's fine because look, I got $54 credit, and I have to sell it at the 1650. I bought at 1651. So I'm gonna lose $1, but I got $34 in credit. So yeah, didn't make as much as I'm supposed to right here. But remember, I did have another 100 shares. If you watched my video yesterday, and I sold 95 of that at 17.97. So there was some profit made. So we crushed that with SoFi. And then last but not least is Hims and Hers. Hims and Hers, I'm getting crushed on as well, but we still made a good play. We sold the $20 strike price. We got a $98 credit, but our average cost is 20.63. So it's $20 plus the $98 credit, 20 minus 63. That's about what, $35. So I'm about to make another $35 off of this transaction as long as Hims and Hers stays above $20. So here's our market. Here's a portfolio update. As you guys can see, it's been up, down, but it's kind of been steady, and that's how I like it. It's just steady. I don't want to be up, down, too much, and So listen. Once again, if you haven't watched my previous videos, you gotta watch my previous videos. Why? Because you're gonna understand, and you understand that starting out habits, small habits, is better than starting out big and fast. I think what happens is we want to get into think about someone who's starting into stock market, and I don't want to compare industries. Don't think about comparing industries. I'm just comparing like extremes, right? Stock market person starting out very little, $1 a day, and someone in real estate who has all the money, has everything. They are both investing, but the person in the stock market or the real estate, they have bigger money. They have a lot of money, and both these people are brand new. They're first year. The mistakes that's going to happen between the both of them, the learning curve, the amount of money that they're going to lose, it's going to hit the person harder than it's going to hit the person who's starting out small, right? And when I'm learning these mistakes when starting out small, my psychology is getting trained, is mentally getting trained for that. But now moving forward, when the amount is bigger, it's not something new to me. It's something that I've trained myself versus when you have a lot of money and you're not psychologically there when it comes to financing. It doesn't matter how much money you have. So I leave you guys with that. Today's Wednesday. We got Thursday, Friday, and we see what the market gives, ladies and gentlemen. Talk to you guys next time. Oh, look at damn. Look at that. Look, market freaking 25 over here. I wish if this could happen, ladies and gentlemen, I'd be so happy. Spy could just give me these $700 right now. Oh my god, I'll just take it and run. My account would be just up. But you see the market playing with us, so we talk next time.